So welcome back to another video, everyone. So in this video, we are going to put everything we've learned in action. Everything we've learned about chart patterns, we're going to put it in action. I'm going to show you how to apply these things we have learned, how to identify the chart patterns, and the things to look out for. Now, before we do that, there's a few points I want to go through. The first point is that patterns can be found in any time frame. What you guys have to understand is, once again, you can find a pattern on any time frame, on a daily time frame, on a 5-minute intraday time frame, on a 15-minute time frame. Patterns can be found on almost any time frame. Now, the thing that you have to understand about any time frame or all the time frames is that the larger the time frame, the bigger the move will be. The smaller the time frame, the smaller the move will be. Now, obviously, some people are going to say, well, why not trade the larger time frame because it's going to give us a bigger move? No, what I mean is, yes, it's going to give us a bigger move, but if you are a day trader and if you are someone that is not looking to hold the position overnight, we don't care about capturing larger moves. We're trying to trade on a daily basis. Now, if you're someone that is day trading a smaller move, you are not looking to carry it over to the next day. Right, so for example, on a larger time frame, make sure there's more supporting factors behind the trade idea. So let's say you're looking at a yearly or a daily time frame where each candle represents a day. Now, if you're looking at a daily time frame and let's say you have a double top, right? Let's say you have a double top chart pattern. That's a double top. As you have a double top chart pattern, in here you have to understand the play has to be formulated the next day. The next day is maybe 24 hours away, maybe 12 hours away. In that time period, a lot of things can happen. Maybe the company comes out with good news and the pattern doesn't actually keep going off. Maybe the company starts trading sideways and then good news comes out. A lot of different things can happen. But if this is a 5-minute chart, right, you're going to know immediately if this is going to sell off or if this is going to most likely go up or not. Right? So there's a difference of trading patterns and looking at the daily chart, weekly chart, or maybe the intraday chart, right? Another thing I want you to keep in mind is that if you identify a pattern on an intraday time frame, make sure you exit the same day. What a lot of people don't understand is, let's say this is a 5-minute chart and I have a double top, and let's say the double top formulates and the market closes right here. As the market closes, most people would say, you know what? I think this is going to keep selling off tomorrow. No, this is a 5-minute chart. This information only applies for today. If you're day trading this, tomorrow should be a new day and you should exit before the close, because tomorrow stock can gap up on good news, stock can trade sideways. A lot of different things can happen. So you need to make sure you understand that, guys. Next, patterns do not always work, so make sure you have your exit points established. Patterns do not always work. They do not always work, and I keep bringing that up because I don't want you to see a chart pattern and say, okay, I see this chart pattern, I should buy, I should sell. No, you need to have more supporting factors behind this move to actually showcase you a solid reason on why this pattern will or will not work. So now I'm going to jump into a real live stock chart and I'm going to show you examples of patterns working and not working. We are looking at stock Apple into our assignment. We are on a 5-minute chart, meaning all of these candles represent 5 minutes of price action. So now we can see what happened. The market opened up, Apple opened up strong, made a strong move up. As it made a strong move up, you can see what happened at $240. At $240, stock Apple is getting rejected. There is a rejection area going on. Right now, we don't have a pattern. Right now, we have absolutely nothing going on. The only thing we know at this current moment is that stock Apple made a strong move up. It got rejected at 240. That's our critical resistance level. That's also the all-time high for this stock. Stock Apple has never been to 240 before, so that automatically becomes our resistance point. This is where there's a lot of aggressive sellers. Now, as we have that established, we keep moving forward. So I'm going to keep going forward. As I keep going forward, what do you guys see happening? If you guys look here, what do you see happening? Now I want you to clearly identify this. What do you see going on here? Around this 240 area, once again, stock goes right into it, gets rejected, pulls back, buyer step in. Goes up, gets rejected, buyer step in. Goes up, gets rejected, and now buyer step in. Right here, we have the ascending triangle. Now, like I mentioned, the names of the patterns do not matter, guys. What matters is the idea behind the move, right? The idea behind the move is bulls are aggressively strong, bears take control and reject the price. Bulls step in, bears reject the price, same level. Bulls step in, bears reject the price. Bulls keep stepping in higher and higher. At this point, we know and we are aware that this is forming a pattern. We are aware that the bulls are stepping in, that the bulls are ready to take the stock higher. So when we identify a pattern, the whole idea is to see the pattern or identify it before it happens. And as I mentioned in recognizing or becoming a pattern recognition machine, the more you take on trades and the more you trade, the more comfortable and more familiar you're gonna get. So at this point, we are aware, I'm aware, and I'm like, you know what? I see what's formulating and I see that there's probably a high possibility that this can break on the upside. Is it breaking? No, but can it possibly break? Yes. I am looking to take the trade after the 240 break. Now this is where level 2, this is where time and sales kicks in, right? This is where reading the tape kicks in, and I go over that in part 5. But that's where this kicks in, especially when you're trading on an intraday time frame, especially when you're trading on a smaller time frame. This is an intraday time frame. Since I'm trading on an intraday time frame, the second thing I have to keep in mind is that if I take this trade, it is not going to be carried over to the next day. I might play it for 15 minutes, I might play it for 20, I might play it for 5. It's a day trade. Now, if I'm trading this, I have two options. Option A is I can just trade the stock, or I can buy calls. Remember, if you buy calls, you're anticipating that the stock's price will go up. If I buy calls, me personally, I would look for the 240 strike price expiring this Friday. I like to play weeklies. I like to play options expiring on that Friday or on that week, right? Or I can look to purchase the stock. That's completely up to you, depending on how you want to trade, right? Now, if you see what happens right here, boom, pop. Now, if you guys take a look at this pop, what do you guys see? Strong volume, strong move up. This is giving you a strong entry point. Now, if you guys notice, once again, we are on a 5-minute chart. Me personally, when I'm trading on an intraday time period, I like to use the 1 minute in conjunction with the 5. I like to use both of these, and I'll show you guys my full trade layout once we get to that part. But for now, just want you to focus on this. If I'm day trading, these are the two time frames I really like to focus on. Focusing on that, I can see that the buyers are extremely strong. Strong volume breaks 240. That's giving me my entry point. On that entry point, my stop would be maybe around there, around 239.7. Why? Because I'm trying to be a little bit below the 75 area so market makers can't stop me out. And you can see play keeps going higher and higher and higher. And now obviously the next question people have is, all right, we got the entry point. Where do I take my exit? The exit is obviously one of the most important parts, because obviously getting in the trade is one part, and then obviously taking profits, knowing when to exit, is the second part. Now that depends on you, and I'm gonna go over that in another lesson. But what you have to understand is when you take on a trade, your exits could be A, you either leave your stop, depending on what your profit target is, or B, you realize what's happening. So in this situation, stock is getting rejected by the 241 area. So if it keeps getting rejected, I might say, you know what, I'm not comfortable in staying in this trade. I'm not comfortable in risking this much to not even know how much I'm going to potentially make. I might just sell half here or sell my full position here. That is up to you, depending on what your game plan is. For me personally, when I'm playing 5 or 10 minutes, so I'm looking to enter maybe around this candle on the break, and maybe getting out here if I'm playing calls, if I'm playing options. That's my quick scalp. I'm in and I'm out within 5 minutes, within 10 minutes, whatever the case is, and I'm done with the play, right? But if you take a bigger look at the big picture, you can see what happens. Seeing this play now looks a lot easier. It's like, wow, I could have caught this. But the whole idea is catching these plays in the moment and being able to capitalize on these moves. Now, once again, our job, depending on how you're trading, and like I said, I'm scalping, I'm trying to capture a smaller move. I'm happy with that move. That's giving me a high probability, that's giving me a high reward and low risk trade. So I like this trade. It's also giving me a nice pattern, nice confirmation. You can see high volume, strong breakout. Everything on this play looks great. And obviously me personally, if I'm day trading, I'm not holding the stock all day. I'm usually out before 12, right? Now, if you keep going forward, like I mentioned, looking at the plays then and looking at the plays now are completely different. And you can see the next day, yes, the stock does go higher, but obviously there's no real direction the next day. So when you're trading patterns, especially if it's on an intraday time frame, get in, get out, and that's it, right? So that's a daily pattern on stock Apple. We're looking at it on an intraday time period, so we're playing it very, very small. All right, so here we have another example. Here we are looking at stock OSTK. We're looking at a 1 year, 1 day chart. So we're looking at a daily time frame. We're looking at a larger time frame. So now this play will be a little bit larger, right? Now when we look at this overall play and we analyze it, let's establish our critical levels, right? We establish our critical levels right there. That's one level. I have another level right here. This is my support area, resistance area. I have another resistance area around right there, right? Now, when I look at all of this, right, this is what I have. I have my critical levels established. And now when I look at the overall play, what do I notice? I notice that this stock has been on a downtrend for the longest time. Right, so if you guys take a look right here, you can see a nice healthy downtrend. Starts from March 4th, 2019, goes down, retracement, goes down, retracement, goes down, retracement, over and over and over and over again. So healthy downtrend, nice downtrend. Obviously, there was a reason on why this went on a downtrend. I'm not going to get into that reason yet, but strong reason on the downtrend. Now, besides that, let's look into the overall play. When we look into the overall play, we see that the stock went from about $23 all the way down to about $9, all the way to $8.96. So the stock made over a 50 or 60% move down in the past few months. Now what we see happening is we see that the stock starts making a big move up. The stock goes from about $9 all the way to $12 plus. So it makes about a $3 move up, right? 20% move up, 25% move up, whatever it is. It makes about a 20% move up, higher than 20%. I don't know the exact amount, but higher than 20%. As it makes the move up, there is strong volume. Volume is there. Now, there's a few things that you have to understand with patterns, right? You have to understand the move behind it. Now, when we see something like this, the first question I have is, number one, why did the stock go from 22 all the way down to 9? That's number one. Why did it go from 22 to 9, right? Second is, why did it go from 9, right? Why is the stock going from 9 to 12? Why is this stock now going up? Is there any new catalyst here? Is there any new event here? Is there any driving force behind this play right now that's causing this stock to go up? Because if there's not any driving force behind this, this could just be a fake move. It can go like this and continuously keep selling off. So I don't want to get caught up in that. So what I'm looking for, or what I'm supposed to do, is number one, understand if there's any spark. Now, obviously, if there is news or a huge volume kicking in like this, there has to be primarily some catalyst. Usually there is a catalyst. Usually there is news. I go over catalysts in part 8, and I explain what are some catalysts we look at. But for now, just look at this. Let's say there's some event or some driving force behind this move that's saying that this is going to go up. Now, if this is a strong driving force up, we now need to understand this move. So let's understand it. Stock is at 9, makes a strong move up to about 12. Nice high volume. The next 2 days, stock goes down. Volume also goes down. So at this point, right, and I'm not going to jump into the news, I'm not going to jump into what the catalyst is because I don't want to throw you guys off. I just want to focus on price action. At this point, the stock made a huge move up and it's now taking a break. This looks very similar to the bull flag concept, the bull flag pattern, right? The concept is the same. Stock makes a huge move up and boom, the stock takes a break. Now, since that's happening, what we as traders are looking to do is we are looking to see what level would this stock have to break, what level would give us an entry point. So if I look at this trade right now, me personally, I would say, you know what, if it can break the $12 mark, if it can strongly break 12, I would look to take this trade. Yes, if this has a strong reason behind this move, if there's a strong set of news, strong set of catalysts, this is a strong move up, this could just be the stock taking a break. So I would have to wait for the next day or the day after. So that's my first approach. My first approach would be I would be a buyer if this stock can break this $12 mark, obviously with increased volume. That's number one. Number two, this stock might just trade sideways and then continue later. Or number three, this stock could just start selling off again and this could not be a sustained enough move. At this point, I don't know what's going to happen. You don't know what's going to happen. The only way we are going to approach this move is, okay, if it does 1, what's my game plan? If it does 2, what's my game plan? If it does 3, what's my game plan? Do I have a game plan for 1? Do I have a game plan for 2? Do I have a game plan for 3? Right? So at this exact moment, I set my game plan that if it breaks 12 on strong volume, I'm looking to trade this stock. I'm looking for an entry around 12. I'm looking to take profit around here, and I'm looking to put a stop below that area. So now, since it's a daily chart, we're not going to get the move right away. So now I wait for the next day. So I'm going to go to the next day and I'm going to show you guys what is happening. All right, so now I'm on the next day and you can see what's happening. Right now it's 11:27 a.m. for the next day. As you guys can see what's happening the next day, the stock is approaching 12. Now, when I'm trading, obviously I'm not going to take a trade on a daily time frame. I'm going to actually go to a smaller time frame. So what I'll do is maybe go to a intraday time frame such as the 5-minute. As I go to the intraday time frame, I can now see what's going on. I can see that this stock is going right into resistance. Now, at this moment, do I have a trade? No, I don't. I only have a trade if I see a strong breakout. Because if you guys take a look here, you can see stock went right into resistance, got rejected, and fell. That can happen again, right? But I don't know what's going to happen, so I'm going to wait and watch. So right now, I'm going to skip 10 minutes and see what happens. As I skip 10 minutes, let's watch the price action, and boom. You guys can see I skipped 10 minutes. Stock went up, got rejected, it's pulling back, right? Right now, that's just a pullback. We're gonna skip 10 more minutes and see what happens. Now, if we skip 10 more minutes, you can see stock goes up, takes a break. Stock goes up, takes a break. Boom, stock is breaking out. Huge volume, very strong volume, showcasing a lot of buyers are being aggressive at this moment. Now, obviously, when you guys are making your entry, one thing I would recommend to look at is something called level 2 and time and sales. And I will break this down in part 5 on reading the tape. You use level 2 and time and sales to see how strong the move is on the up or down side. You would want to go to like a 1 minute and a 5-minute chart. So when I look at a 1 minute chart right here, I can see very strong move. If you guys take a look here, very strong breakout. Now, after the breakout, stock pulled back. Since I didn't catch this breakout, my entry point as of now would be, okay, if this stock can break 1227, I would have the highest confirmation. Yes, I had it at 12 and it broke 12, but what if it gets rejected and it's a fake breakout? I don't want to get caught up in a trap. So what I want to see is I want to see it break that high and continue. If it can break that high and continue, that will give me a strong confirmation. So I'm going to skip 10 more minutes. Now you guys can see as I skip 10 more minutes, stock goes up, gets rejected, comes back, rejected, and is trying to break out again. Now obviously, like I mentioned, this is where level 2 and time and sales plays a role, but let's just say for argument's sake, everything looks good. Now obviously, if I want to trade options, I can trade options on this, or if I want to trade stocks. I'm just going to buy 500 shares. So I want to buy 500 shares at 231. So I go 500 shares at 231 or 232. I send in my order. Probably not going to fill an app on this thing because I'm using the on-demand feature right now. But let's just say, for argument's sake, I'm just going to use the buy market order just so you guys can see the order go through. Once I hit buy market, boom. I now own 500 shares of stock OSTK at 1230. Now as I progress and I skip 10 more minutes, you guys can see either my P&L go up or my P&L obviously go down, right? Now also, as we take on a trade, the other thing you guys should be familiar with and understand that you're going to do is on every trade you guys take, what should you have? You should obviously have your stop loss established. So at that point, my stop would be below 1190, not below 12, because that would allow the market makers to take my shares. So I would be below 1190 because that's where the breakout happened. That was the congested area. So I'd go to maybe let's say 1189. Boom. I now have a stop. I have a stop. I own 500 shares. If the stock fails and comes back here, I'm out of the position. Now, if you guys notice something, the pattern we saw was on a daily time frame. That's where we saw the pattern. But the entry I made was on an intraday time period, so I can get a better entry and exit point. I'm going to skip 10 more minutes and see what happens. Right, you can see, keeps going down, keeps getting rejected. Let's skip 10 more minutes again. You can see, it's trying to continue. Let's try one more time. Look what's happening. Look at the price action, right? That's showing you stock went up, broke out, pulled back, we held through, we put our stop at a good point, and stock is now continuing, right? Let's skip 10 more minutes. Boom. Stock keeps going higher and higher and higher. That's the whole idea of a trade. The whole idea of a trade is you get a solid entry point, high confirmation, place your stop, and now you manage the trade, which I will break down once we get to it. Now our job is to manage this exact trade. Now as you guys take a look at this, as the stock is going up or going down, at this point you can move up your stop if you want. Why? Because you're giving yourself too much of a room. That depends on you, on how you want to trade. And in part 7, I'll show you where to put your stop, how to identify levels to place your stop. But in this example, this would be a good point to place your stop loss. And obviously, depending on how you're looking to trade it, you could move your stop up or get out of the position. Now, if I'm looking back at the stock, I might say, you know what? Wow, what a strong breakout. I still have 3 hours to go until the market closes, so I might not want to exit. If I want to exit for whatever reason, I can look at my intraday chart and say, you know what? I'm happy with the profit. I'll take the profit. Or I can say, you know what? I'm going to take my stop and I'm going to put my stop up at 1250, right? Why? Because if I put my stop up, I am now basically locking in 20-cent profit. I have locked in profit because remember, I got in at 1230. I've moved my stop up. Another way I can approach the stock is, okay, it's having a hard time breaking 13. Since it's having a hard time breaking 13, or if it can't break 13, I might exit here. But if it can break 13 and breaks out of that, I might actually just place my stop loss somewhere around here. There's a lot of different ways to go about it, guys. I don't want to give you one way. That way depends on how you approach the trade. But just to recap, we found a pattern on a daily time frame, right? There was a strong move, right? Just to recap on it. Stock went up, right? As the stock went up, strong volume decreases on the pullback, known as a bull flag. This day, volume increases, and on this day, we went to an intraday time frame. We went to a smaller time frame. When we use entry points on intraday time period, I like to use something called level 2 and time and sales, known as reading the tape. I am going to break down reading the tape in part 5, and so you guys can better understand it. But for now, we're not going to focus on that. All we're going to focus on is the idea behind the patterns. We're going to focus on critical levels such as support and resistance, and understand price action on a deeper level. And if you guys go back to a 1 minute time frame, you can see it had a hard time at 13. I can either leave my stop, or I can say, you know what, I don't want to be in the trade. I'm just going to exit and lock in profits. I'm happy, I'm done, I'm out. That depends on you, depends on how you want to go about the trade. But just to recap once again, make sure when you guys are taking on trades, you're starting off from a larger time frame, and then when you make your entries, you go to a smaller time frame. So these are just 2 examples of chart patterns so you guys know how to put everything together. Now in the next video, that's where your assignment is going to be, right? I'll break down the assignment, and then I'm going to go over a bunch of different examples like this so you guys can see patterns and become better at identifying the ones to trade, and become better at identifying the ones you shouldn't be trading.